So going into the next subject, and maybe most important one, is the different type of investment instruments that you can have within this registered accounts. A lot of times people think that an RRSP is an investment. It is not. It's just the account. So a lot of people say, I already have invested into my RRSP. Contributing into your RRSP is not investing, it's just putting the money. Yes, it's one step, but then the most important step is what you do inside that account. Best way that I've been able to explain it over my experience is that consider those registered accounts as a basket, and what you put inside that basket is what makes that account successful or not. So in terms of investment instruments, I'm going to talk about some of the most important investment instruments that you can do within this account and the average return nowadays on a yearly basis on those particular investments. I'm also going to describe some of those investments for you to have an idea of how you can employ all of those ones to then diversify your portfolio using these instruments. So starting with a savings account, you can actually have a savings account inside all the registered accounts. As you know right now, a savings account is giving almost next to nothing, 0.10% if you're lucky. We also have GICs or term deposits. Those are basically, they're locked in for a certain period of time and they provide you a fixed interest on that. Right now, on average, they're providing a 1.5% return on your investment. Next is bonds. So it could be either corporate bonds or government bonds. And basically, they range from 1 year to 5 year terms. And what it means is that your money is locked in for that particular time. And then the interest that you receive it as a form of a coupon, a payment, either quarterly or monthly. And then on top of that, whatever the bond itself could potentially increase in value compared to the rest of the market. So that's two ways, but right now on average is providing about 1.8% on a yearly basis. The next one in the list, and as you notice, I am going from the most conservative investment to potentially the one that imposes a little more volatility. So then balanced mutual funds. They are basically instruments that take several securities. So corporate bonds, government bonds, they take stocks and they pull them into one fund that is being actively managed. And for that reason, a lot of times they produce higher returns than you would typically receive from a regular bond or a stock. But right now, on average, they're providing about 5.5% return on your investment on a yearly basis. The next one over is the TSX Index. So the TSX Index basically is a pool of the top stocks within Canada. There are some ETFs out there and some funds out there that they allow you to invest in the TSX Index, and basically they just invest in the same stocks that the TSX has, and on average on a yearly basis you receive a 7.5% return on that one. The next one over is mortgage investment. This is one that a lot of people are not aware that they exist, that they can utilize within their registered accounts. And basically what it means is that, think about it this way, mortgages are typically funded by people's investments. So in this particular way, the investment is secured against the property that the mortgage is against. And on average, you can receive a yearly return on this mortgage investment of 9%. I'm going to go a little bit more in detail about the mortgage investment, but first I'm going to finish talking about some of those key investments. Then you have stocks. So individual stocks. Now, individual stocks is very hard for me to tell you what you can earn from a stock, because you can earn much higher, you can lose a lot of money, but on average from a particular stock you can receive about 10% return on your investment. In recap, we talked about the different type of investment instruments that you can have within this registered accounts. Savings account giving 0.10%, GICs 1.5%, bonds 1.8%, balanced mutual funds 5.5%, TSX Index 7.5%, mortgage investment 9%, and stocks about 10%